If you're looking to invest in real estate, did you know that you do not need your own money to buy and own real estate and become profitable? Before I started investing, I didn't know that. But once I figured it out, I was able to buy 15 properties in 11 months and be named Crew Magazine, Investor of the Year. My name is Tyler Soulliere, and today I'm going to break down my own personal case study with you to prove that not only are my methods unknown, but they're proven to work time and time again because they have for me. So, example, one property which I now own with none of my own money is a small duplex here in Windsor. When it first came up for sale, I remember many investors, they would turn away from it because they saw that it needed a lot of work. Well, the previous rents the landlord were getting were low. But the main reason, like most investors when they're looking to buy a property, is they think it's overpriced. I see properties differently. The property was actually a steal because it met all the criteria I look for when investing in real estate. So first, it was in a quiet area. It had 2 units, and I love investing in properties with 2 to 4 units under one roof. Plus, each unit had 2 bedrooms and separate utilities for each, which is a must when you're buying multi-unit properties. Second, since the property needed work, well, the landlord wasn't able to rent the units out. No one wanted to live in it, which meant no income while he owned it, which also meant he was paying all the holding costs, so losing money each month, which meant he was more motivated to sell. Third, properties generating no income, well, they decrease the value of the property versus buying a property that is tenanted. And when you invest in multi-unit properties, the income matters much more than comparable properties that have sold in the area, such as when you're buying a home to live in. Fourth, and the reason why I saw it differently and not overpriced, well, realtors, when they're pricing vacant unit properties, will try to project what the property could rent for. Thus, they price it based on potential income. However, many don't do their research or know the market, and they'll project below what market rents could be, which actually results in them listing it below market value already. So as a result of all these factors, I was able to purchase the property way below market value because, of course, I didn't pay list because I knew the seller was motivated. I then renovated the property, I rented out the units for much higher rents than anyone thought I'd get, but I knew I'd get, and then I went to my bank and I refinanced the property. The bank, they did their appraisal and they ended up valuing the property at even a higher value than the amount I projected when I ran my numbers, which resulted in them giving me all my money back, all the money I had invested in the property. So my down payments, my closing costs, my renovation costs, and my holding costs, money out of my own pocket, plus another $5,301. And the property still cash flowed even after I refinanced it and had to pay the higher mortgage rate. By knowing what to look for when researching for investment properties, the possible rents the property could get and the future value of the property upon renovating it, I knew I could refinance it for a return and it ends up giving me my capital back so that I can invest in another property. And using this method along with my 5 other methods has helped me build my real estate investing business to a portfolio where I now own over 50 doors, and I've done it in just 4 years. And I've done it with little to no money out of my own pocket. And if I can do this, you can do it too.